second here. If you can hear me, say hi in the chat. That'd be awesome. And welcome back to Traders in Pajamas family. Again, my name is Curtis. If you guys are new here, I hope that if you guys find this video valuable in any way, shape, or form, you guys consider liking the video as well as subscribing and turning on your alert notifications so that you don't miss my future live streams. And I want to keep my videos as short as possible, just so that I can keep people's attention a little bit easier, and so that my message that I want to get across does get across pretty well. So let's get started. I'm going to try to keep this a pretty short lesson here today. So if that means I talk to just a few people or talk to myself, that's completely fine with me, and people can just catch it when it's recorded on YouTube. So I was not planning on making a video today, and hello to everyone in chat. But I honestly didn't know if I was going to trade today, but I did, and it went really well, and I kind of want to go over the pros and cons of my trade and kind of talk through, my thinking process. And today is Monday, so that needs to be corrected on that, and then hopefully you guys can learn from my trading experience that I did today. So as I mentioned in yesterday's video, today I was 100% focused on companies that had earnings today. I narrowed that list down to 5 companies, which are, I have the tickers listed here, and I want to talk about how I went through the process of identifying what to trade and then actually trading, and how much I really knew when I actually entered the trade. So I looked at these 5 tickers. Why did I choose these 5 tickers? I really only looked at, I was focused on 2, but I had 5 that I was kind of jumping around between. Oh, am I muted? Oh, how I went through. Oh, Jimmy, I hate you so much. But I was focused on CNX, which is an independent natural gas company. And honestly, when I entered the trade, I did not even know what kind of company it was. That's how little research I did. I just knew that their price was about $11, which I generally like trading, between $10 to $25 priced stocks for this kind of challenge account, because it's such a small account. And so I was kind of targeting smaller tickers. And so a lot of the bigger tickers I didn't really want to trade. And also, so that was the first one I looked in. When I entered the trade, I had no idea about anything about the business. I didn't know what it did. Barely knew what the name was. The only thing I knew was that the earnings came out at 8 a.m. Yeah, you are a monkey. And that the call was at 10 a.m., the earnings call. The other company that I looked at was LXRX. It's a pharmaceutical company. I did know that this was a pharmaceutical company. Their earnings came out at 6 a.m. and they had their earnings call at 8 a.m. So their earnings call was pre-market. So these were the 2 main ones I looked at. I also had Wash, Dorm, and Lico on my list. I knew what Wash was just because their logo said they were a bank. I had no idea what Dorm or Lico did at all. Lico is actually called Lincoln Electrical, and I thought it was an electrical company, but it's actually a welding equipment company, funny enough. So that just shows how little you really need to know when you're trading earnings. Now, when you're not trading earnings and you're trading maybe different kinds of news, then yeah, that's a little bit more important. But during earnings, there's pretty usually a really easy trade, which you just have to ride the trend, and that was what I was looking to do. So it didn't really matter how much I knew about the business. But my main 2 focuses were CNX and LXRX, and I actually thought I was going to trade LXRX, and I'm going to talk about why that is. So let's see here. Go on to this is why. So I looked at the major trend and the secondary trend of the business. And so if you look at the major trend here, the coronavirus kind of started around Valentine's Day, so February 14th. Funny enough, that's kind of when I started trading as well. And it has skyrocketed. So in my head, I did not think I was going to trade this today. I was like, oh, it's already gone up so much. How much room is there really to go from here? So I was keeping my eye on it because I liked that. I saw the earnings before pre-market. It came out at 8 a.m. and I saw that they did well, so I knew it was going to go up. And remember, I want us to be long focused for now for our small accounts. So I knew it was going to go up, or I thought it was going to go up, so I wanted to keep an eye on this one. And I also knew that LXRX, which is a pharmaceutical company, also did well. But I thought I was going to trade the pharmaceutical company. This one already has gone up a lot, so I didn't think it was going to go up further. But if you look at LXRX and you look at what it did since February 14th, it was about at the $3 mark, and now it was trading around the $2 mark, and the lowest point it was at 1.7. So there was a lot of room for this to come up in terms of price. Hey, Haruyuki Ik. Sorry if I butchered your name. I'll have to figure out how to read that appropriately in the future. But you see that there's a lot of room for this to grow. So I was mainly thinking that I was going to trade this, but I also had 5 companies total, which I'll show here, that I was just keeping an eye on when the market opened. Once the market opened, I just took a look and see whether or not they made sense. So I looked at let's go in reverse order, and so I looked at Lico welding equipment. Lico. See, it's called Lincoln Electrical. So I thought it was an electrical company, but it's actually a welding equipment company. And when I looked at this, I saw that there was this huge uptrend at this point, and it started coming down at open. But I was really looking for a significant trend. This isn't really a significant trend enough for me. And there's earning call was at 10 o'clock, right? So I saw this big uptrend. I didn't really feel comfortable entering at this kind of second-legged movement, because one, they have already gone up so much, and it really didn't come out down very much. So immediately decided that I didn't really want to trade this. Also, their volume is pretty low. They only trade about like a couple 100,000 per day. So that I didn't really feel comfortable, because low volume means that it's easily manipulated and makes it risky. So I did not know what this company did, and I just decided after looking at the chart and the volume, I wasn't going to trade it. Next one, I looked at Dorm. When the market opened, you can see Dorm, it shot up right away. So 5 minute, it shot up. I immediately just discarded it. I mean, there's no way. There's room for it to continue going up, but it went from $58 to $63. So it just gapped up too much. There's no trend to ride. Get rid of that from my watch list. And then looked at Wash. And this one, when I was looking at it, what I realized was the volume is way too low. They were trading like about 100,000 a day. So I just didn't feel comfortable. Small volume stocks are easily manipulated. So I looked at it, and also the chart looks really ugly. And this is what happens when there's not a lot of volume in stocks. Oh, hey, Randy. Sorry about that. I didn't know your handle yet. But I appreciate you tuning in. But yeah, it just doesn't look very pretty, right? You don't have really clear candles, and the volume's very low, so it could be easily manipulated. So I also got rid of this one. Now, why did I get rid of LXRX when I thought I was going to originally trade it? LXRX, if you look at it, it actually did pretty well at the beginning. I thought there was going to be a really great opportunity to trade it. And then as I waited and I waited and I waited for another confirmation candle to confirm the trend, it broke the initial breakout area, right? So this is where it broke out. I put a line here, and it broke below it. So therefore, there's no trend, and therefore, I'm not going to trade it. So no trend confirmation. So I just removed that. And then I was really just looking at CNX at that point. Okay, and this is what it looked like during the day. So I made an educated guess based on the candlestick movement, whether or not it was going to go up or down. It shot up, right? But I have to remember, I knew that there was a call at 10 o'clock. And when you know certain events are coming, it's a little bit predictable, and the market can be a little bit predictable. It shot up, and then everyone waited for the 10 o'clock call. Now, you see this candlestick here. This is the uptrend. I see a pullback, which is a part of the two-legged move, and then I see a confirmation candle here. But this is a really bad confirmation candle, because you can see the top end of this wick is really long. And in summary, in my head, what that means is this looks like a kind of movement like this, right? So it came up, but then it went up really high, but then it came back down. And so that would create a green candle with a really long top wick, right? But remember, this is during the call. So the call was during 10 o'clock, right? And so when it shot up, it was kind of near the end of the candle. And this could mean two things. And funny enough, it actually could mean two things, and they mean different, completely opposite directions for the stock. It can mean one, that some buyers are feeling FOMO now that it's come up, and they saw that this was a little bit green, and they wanted to get in the action, right? And so that could mean that it's probably going to go down because people bought, but there's no confirmation of a trend, and they jumped in too early essentially, and they trapped themselves. But in my head this is during the call, and when that moved like that, that means a lot of people heard something good. That's how I took it. And so I took this, even though this is generally a weak confirmation candle, because this happened during the call. I thought this upward movement meant some people must have heard something good, but people wanted to finish the call or hear more of the call before, moving buying more of the stock. So I decided to enter in this candle, the next candle, and taking this as a confirmation candle. And so I entered at 12.17. Now, I did not know this was going to be red, obviously, and I actually almost had a heart attack because I bought in at 12.17 and it came all the way down to 12.03, and my stop loss was at 11.96. So if it hit my stop loss, I would have gotten out. This is not a really strong confirmation, remember, so I have to also manage my risks. And so if it hit my stop loss even for a second, I was out of that trade. I didn't want to lose more than 2% of my account, and I bought in with 100% of my account. Now, if this $100 was really my full account, I would not have done this, right? But for me, I was comfortable using my day trade bullet to save my life, and also, this $100 is, I can always reload, and I feel comfortable that I can just put in a new $100 if I needed to. And I kind of wanted to kind of have this challenge start off on a good foot. But if this was truly $100 was all my money that I wanted to invest in, I probably may have went only with 25% or 50% of my account. But luckily it worked out, right? It shot up after, so it confirmed, and then it kind of just stayed up here. So if I show you my screenshot, I didn't really want to show my phone to the camera, but here you can see a screenshot. I went in at 10:12 actually, just a couple minutes after 10:10. I bought in at 12:17. I bought 8 shares for $97.36 total price, and it is currently up 6.24%. That when I sent or scheduled this video, I made the title plus 6%. Did I know it was going to stay there? No, of course not. But, based on the volume and kind of it just trending this way sideways, I figured it would probably stay around the 6% or plus range. And so that's why I felt very comfortable making that title. If I had to fix the title and change it, if it came back down, I could have easily done that. So it's not a big deal. Okay, great. So I want to talk about a few things about this trade. So one, it was a very risky trade. The confirmation candle, although there was a confirmation of a trend, sort of, because the confirmation candle wasn't very good, this was a risky trade. So when it came down, I did really almost have a heart attack, and I was very comfortable using my tape trade bullet to, get out of that trade if I had to. Now, 6%, that's not life-changing. I made $6, but I want to remind you guys the power of compound interest. If you grow at 6% a week, that equals to 20.6 times your money. So if you have a $100 account, that would turn into $2,000. If you have a $1,000 account, that would turn into $20,000. Now, I don't recommend fixed price goals, but I just want to show you that you really don't need to grow your account very much in order to have a huge impact in the long run, right? So make sure, manage your risks, and make sure you're alive so that you can continue to grow your account little by little, and it'll make a huge impact in the long run. Another idea I want to talk about is the rule of 72. The rule of 72 is quite simple. All it means is that if you divide 72 by the percentage, you will find the number of periods it would take to double your money. So if I grew at 6% a day, then 72 divided by 6, I would double my account every 12 days. That's what that means. Okay. Another thing I want to talk about is I indirectly made an educated guess that the big wick was not actually weak buying power and pushing it back down, but that someone heard good news and it was going to go up. This is indirect fundamental analysis. I was not listening to the call, right? I was literally just looking at the technical candlestick right here, and this is called technical analysis. So I was doing indirect fundamental analysis using educated guess through my technical analysis of the candlestick chart. And this is actually the foundation of all technical analysis. You're using other people and you're just relying on them to be smart enough that, if there's a trend, there's a reason that there's a trend, and you're letting other people do the work for you. Okay, so this is a great example that why it would be bad to just give people trade alerts, right? I saw this and I entered this trade in like a few minutes. And then by the time I send out a text telling you to look at it and you open up your brokerage to try to trade it, it will have already moved a ton, right? All the way up here. So trade alerts are just not effective. And also, this is also a great example that even if you have a full-time day job, you can easily day trade. I just entered this trade. I had a stop loss all the way down here. Don't actually set your actual stop loss because market makers will see how close it is to the current price, and they may just move the price down to hit your stop loss and get you out of the trade. So I had it at the breakout point. So if it actually came down all the way here and I wasn't paying attention to it, it would kick me out of the trade. But in my head, I'm always checking this stock every 30 minutes, hour or so, just to make sure it doesn't go to my 2% mental stop loss and that I would have to exit the trade myself using my day trade, right? And so that is the trade that I went through. I want to talk about, this is 4 key takeaways from this trade. Number 1 is that if you don't have a good setup, you don't have to enter a trade, right? I wasn't planning on trading today. It just so happened that I took that pop up in that candlestick as a bullish indicator, technical indicator, and that people must have probably heard something good. And so I went long, but I was very, very ready to get out of that trade in case I was wrong. But also just because I got a good result doesn't mean it was a good trade. This was a very risky trade, and therefore for the first 10 minutes, I was staring at this ticker and making sure that it did not hit my 2% stop loss and that I had to get out. Another takeaway is talking about the indirect fundamental analysis through technical analysis. Take advantage of other traders. Work smarter, not harder. I didn't even know what kind of company this was. I did not know this explored natural gas. I just saw this as a ticker that had earnings this day. Okay, so work smarter, not harder. Number 3, great example of that you can trade even if you have a full-time job. I was just kind of checking the 5 companies that were on my watch list and every few minutes or so to see what trends were forming, if there's a trend that formed. And then if there was, I looked for a confirmation candle like I did, and I entered the trade. Once you enter the trade, I really wasn't thinking about it much until tomorrow. I'm not gonna take profit on it. And then if it gets close to my $11.96 mental stop loss, I would have just exited. But I was just keeping track of the price, but really not thinking about it very much. And the last thing I want you to take away is low volume stocks are very dangerous. They're easy to manipulate. Try to avoid these stocks. This, kind of the indirect fundamental analysis through technical analysis, that is just a very, very small thing that they teach in this technical analysis of the financial markets book. Like I said, it's so good. It will cut your learning curve down by so much. I highly recommend it. If you want to improve your trading by a ton, go buy this book. It will save you so much time in learning. All right, so that's the lesson I wanted to share today. I'm going to leave 2 minutes here for any questions. Let me know if I can answer anything or if I went too fast. Again, if you found this very, very helpful or very interesting to learn about, please consider liking the video as well as subscribing and turning on your alert notifications so you don't miss future live stream lessons like this one. Any questions? And this is also why you should paper trade before using real money. I could have been wrong easily, just as how lucky I was that I was right. So, if for some reason that during the call they heard something really bad, this could have shot down. I would not have had time to exit the trade with a sell order, and I could have lost a large percentage of my portfolio because I had 100% invested in it. So also, you shouldn't usually have 100% of your portfolio invested. 25 to 50% when you're only at $100 is probably you're going to have to do that. But generally, you should keep each position under 10% of your portfolio and each trade the risk less than 2% of your total account. Any questions? All right. I'll take that as no questions. Thank you guys all for watching. I appreciate all 8 of you guys. I honestly wasn't even expecting more than 2 people to show up, so I really appreciate the support, and hopefully you guys learned something very valuable from this quick live stream. And good luck trading this week.